Hello, everyone. It's Brian with TinyCryptoBlog. The headlines for this week, they kind of came together all at the last minute. But we have got a quick update on the FTX trial to mention. We've got Bitcoin ETF news as well as ETH ETF news. We've got an update with Ripple, which is the main thing. And there was something else. When it comes to mine, I'll throw it out there. Hope you're all doing well. It's Friday evening, and let's get started. So, with FTX, if you hadn't seen it, last week, I think it was after I'd done the summary, Sam Bankman-Fried had been charged with 7 counts of guilty on 7 counts. The ruling or in sentencing will take place in spring of 2024. I'm guessing in the meantime, he'll probably be held in jail until that time. Next, and what I wanted to get into was I noticed that Ripple, the last few weeks, have been starting to make headlines with different business arrangements because Ripple and XRP are 2 separate things. Ripple is the company. They're the one that engages in the business transactions of all the things that people want to use the XRP token for, which is just the blockchain-based token used for transactions going back and forth. Ever since earlier this year, when the ruling with the SEC was put to rest that XRP tokens are not securities, that opened the door, as we're seeing with companies being comfortable using working with Ripple and using XRP tokens on that blockchain for transactions. I think I'd even seen them for one of the nations as a candidate to be used for CB cross-border payments or cross-border CBDC payments, possibly like a wholesale. I saw they penned a couple deals, working agreements with companies just for regular interbank transactions. So it's good news. So does that mean we should go out and buy XRP tokens? Hell no. This is why I say it. Buying an XRP token would be the same as buying a JP Morgan token, which on that note, has anyone seen the code or a record, the ledger, with all these transactions that have supposedly happened with JP Morgan's token? All I see are headlines and it was reported this and volume that and dollars that. But has anyone seen code? Has anyone seen screenshots of the actual ledger transactions? I don't know. And that's one of the things that you need to learn, especially if you're new to the space, is that there's a saying in the community, don't trust, verify. Because as we learned from the last cycle, the things that we just trusted third parties in, we got our asses burned with. Celsius, BlockFi, Terra Luna, FTX. If there are questions, they 100% need to be answered before we put 1 penny, 1 pfennig, 1 euro, anything into it. Same thing with XRP. Owning XRP would be the same as owning a JP Morgan token, where Ripple is completely centralized. Ripple controls the issuance, they control the blockchain. The code is open source. Anyone can look at the code, but they can't run it. They can control the burn rate, and the price doesn't matter as far as the usage goes, because 1 XRP, as I still remember it, 1 XRP token is used for 1 transaction, regardless of the price. And if it comes into a situation where they need to create more tokens to manage volume of business transactions with all the companies that they have contracts with, they're 100% going to do whatever is needed to satisfy the needs of their paying clients versus doing what's in the best doing the best interest of the token holding community. Like, Ripple came out in the early days of cryptocurrencies where Bitcoin and all the proof of stake coins and all the tokens that existed at the time, the few tokens that existed at the time that were built on top of Ethereum and all the other layer one solutions, they were coming out of the same batch. It was the same community, and it was just variation. Well, we've reached a point, Ripple came out of that, but we've reached a point in time. We actually reached this, I think, in the last cycle where Bitcoin is distinctly different from Ethereum, which is distinctly different from Chainlink, which is distinctly different from Polkadot, which is distinctly different from XRP and Stellar. And in this case, if you are gambling on the price or betting on the price and future appreciation in XRP tokens, it is solely going to be based on the business decisions of the people running Ripple. Like, they have absolutely no obligation to you, none whatsoever. They're a business. Those tokens are part of their business transactions. Those are the parameters you need to use. So you want to be part of the Ripple army, you want to say XRP to the moon, that's your prerogative, but understand the risks. And those are the risks. And then what really got interesting this week was with the Bitcoin ETFs, there was a filing, let's see, yesterday, the window where, I'm trying to remember this, the window where the approval can be announced or granted started today. And I think it's a 30, 45, or 60-day window. I just skimmed over the article. So basically, anytime now we could get an announcement that, okay, Bitcoin spot ETFs are approved and they'll begin trading as of X date. There was also an announcement yesterday, was a NASDAQ filing and a filing with in Delaware, I think, like as a legal entity. BlackRock had an Ethereum ETF filed. So I would not be surprised if that's coming down the pipeline. And then today, this is my own note. I was watching, let's pop it up here, a What Bitcoin Did interview with a gentleman named Alex Thorne. I'm not familiar with his background totally, but they had a conversation talking about the topics are Bitcoin ETFs finally coming, and then what, upon approval, what would be happening. And the things that he touched upon had to deal with, like, going through all the steps, how if it wasn't going to be approved, then there wouldn't be a submission for comments. If, basically the fact that certain things are happening that are part of a normal process for the issuance of any ETF indicates that, yes, this is going to happen. And listening to this on a personal level, you need to make your own determination. But on a personal level, I think hearing this pretty much sealed it for me that this is real. It's going to happen. I have my own skepticisms that I've had to get over since 2017. And I don't know how many times seeing all the resistance and the pushback, not allowing for just anytime an ETF was applied for, it gets pushed back, or just the application gets tossed out the door and no. So there was that little bit of a mental hurdle for me to get through. As far as the Bitcoin ETF, if the question comes up with you or family, hey, should I put money in the ETF? Be clear about what it is you're looking to gain from it. Are you looking to gain exposure to Bitcoin? Are you looking to gain exposure just to the price action, like, say, with an IRA account where you can buy stocks and mutual funds and ETFs? And then also understand what's your timeline too. If you're looking to get exposure to just the price of Bitcoin, yes, an ETF, in my opinion, would be a good way to do so, especially for an investment account or an IRA account. I think I'd mentioned before a few weeks back, once this ETF gets picked up, you're slowly going to have family offices, other investment funds, mutual funds start to dabble there and get small allocations using Bitcoin ETFs as their vehicle for Bitcoin price exposure. I think BlackRock, there'll be instances for, I think it was 1 Bitcoin or more, if it hasn't changed. And it's basically just for the big money, where if they wanted to actually swap out their shares for the physical, or in this case, the digital, air quote, physical Bitcoin, they could do that. But it'd have to be 1 Bitcoin or more. But it does provide an avenue to get direct exposure to Bitcoin if you have enough money and ownership of shares to convert. If you're looking just to get the price action, it's a good it'd be a good vehicle, because eventually funds are going to have it as part of an allocation. There are going to be ETFs that use the shares of this ETF as be like a technology fund or a blockchain fund. Will have, say, shares of mining companies, shares of Coinbase, shares of Bitcoin ETFs, Ethereum ETFs, maybe some grayscale digital trust ones. Don't know. Now, if you wanted to get direct exposure to Bitcoin itself, the on-chain Bitcoin that you hold in a digital wallet, this is not the way to do it. You want to purchase it directly. You specifically, if it's just small dollars, you want to save it into a cold storage wallet. If it's something you're going to transact with, you can use it in a hot wallet. If it's not a large dollar amount or a dollar amount you're comfortable with, you can keep it in a hot wallet. You can use it for the Lightning Network for small transactions or quick transactions. You can buy it off an exchange. You can use a service. There's numerous apps out there that have been around and proven themselves through bull and bear markets that you can use. You can stack it up using rebates, like using Lolly or using the Fold app and the Fold card. There's numerous apps out there that you can use. There's one, the name's escaping me. I think one's called Bamboo. There's another one. I can't recall the name, but part of their shtick is that it'll read your credit card transactions and round up your transactions. So if you spend 95 cents, it'll round up 5 cents. And then the end of the day, the end of the week, whatever those roundups come to, that'll be the amount of Bitcoin that's purchased for your account. So there's numerous ways. Strike app, that's another great one. Swan Bitcoin, that's another great one. Rivers Bitcoin, that's another great one. There's numerous ways to get a direct exposure to Bitcoin. But as far as an investment account and just getting exposure to the price, I think the Bitcoin ETF would be a very good way. And then when you're comparing, if they have multiple Bitcoin spot ETFs out there, you'd have to look and read all the prospectuses. I think that's the plural for prospectus, which is sort of like the white paper of the fund, where it has a lot of mandatory disclosures as far as where the money goes, ratios, costs, expenses. And you can determine if there's any rehypothecation going on that will be disclosed in a prospectus. You can compare, is one, at least as far as third-party risk goes, is one Bitcoin ETF safer than another? So something to consider. And then, oh gosh, what was the fourth thing? I do not remember. I honestly don't remember. So yeah, this was a down and dirty week. Got straight to the point. Maybe there'll be a format change down the road. I don't know. It's still getting early into doing live streams. In this case, it was recorded earlier just because it was a long week and I wanted to record it before I had to take care of some other things. But yeah, maybe I'll get more into headlines, more commentary about things. But for now, this is where we're at. If you are watching, thank you. Check out Tiny Crypto Blog. I've got plenty of content on the main website, tinycryptoblog.com. I've got my weekly summary and videos of the week, as well as any articles that I'm able to get around to posting and sharing. It's usually YouTube videos of something that's usually worth knowing from smart people. I also have on the YouTube channel, have all the video content, plenty of shorts, which usually come up with spur of the moment ideas and ahas and, this would be something worth sharing type of content. If you're on other video platforms, I'm on BitChute, Odyssey, and Brighteon. And then also too, this will be published to Anchor FM, which I believe is fully integrated into Spotify. And I think that is all of it. Yeah. Their other social media channels are in the show notes. You can find me on Facebook, on Twitter, where I might get into some spicy, opinionated conversation on numerous topics that deal more with the not just crypto and Bitcoin, but the human condition and the standard state of affairs. So with that, I'll wrap up and say, be well, everyone. Talk to you soon. And let's see if I can get